Hello everyone, welcome to Just Invest Today, and today we are talking about Alibaba, why Alibaba stock is down and its price cuts. Yes man, people keep asking me this question, does Alibaba's price cuts matter? And the short answer is kind of yes and kind of no, but we're going to get into that more in this video. Guys, can you please like this video, subscribe to my channel. I'm going to be providing you guys with so much new content. Help me get to 1,000 yet. Click the subscribe button right now. So let's get into this because these headlines have been kind of rattling Alibaba stock. And yes, it does matter in the short term. Yes, it matters. So Alibaba price target slashed for the record 18th straight week. And we have to understand what's happening here because when analysts see a stock going bad, you see the amount of analysts just randomly coming out, cutting targets here, cutting targets there, because they usually just follow the crowd. They follow what the other analysts are saying about the stock. So that's what you kind of see here, man. Like everyone's just following the same narrative that Alibaba is done, it's going away, moat is getting destroyed. So they're going through that whole narrative. Guess who goes to these analysts and actually looks at the information that the analysts are providing them? The institutions. When the institutions put their foot down, put their money where their mouth is, and they listen to all these analyst cuts, guess what's going to happen? The stock price is going to crash. And that's what you're seeing. Institutions are listening to all the analysts say all the bad stuff about the stock. So they're going to run for the hills. They're going to take their money out. And that's providing us with the opportunity. So let's read some of this. Alibaba price target slashed for the record 18th straight week, which is pretty crazy. It's like one of the longest. Wall Street's average price target for Alibaba Group Holding is set to fall for the record 18th straight week after the cohort of firms lowered their expectations for the shares on regulatory and competition concerns. At least 4 research analysts this week slashed price targets on American depository receipts of the China-based tech giant. So they slashed it from 310 to 200, citing near-term headwinds including regulatory overhang and slowing economy in China. So the regulatory overhang, like how long do you think that's gonna last? I think I'm gonna give it like 4-5 more months of this, maybe like the mid of next year. And then after those headlines are not in the news, they're not like front page, I feel like it's going to be smooth sailing for Alibaba and these Chinese stocks. And then when it comes to the economy is going to roar back no matter what happens. Like the Chinese economy is getting hit with all the supply chain, all the Evergrande issues, all the kind of pandemic issues and all of that stuff. So that's hurting the stock. On top of that, we see the profit margins of Alibaba literally going down a little bit. Look at this, from 45%, 41% to 38%. And that's due to their investing initiatives. They're investing in a lot of different companies. They're putting their money they make back into their company. And it's not showing a profit yet, but I feel like a lot of those fields are going to become profitable. Especially when you look at the cloud, it grew over 33%. So that's what we're seeing with Alibaba. And people have said like the earnings were super disappointing, and I understand that, but we have to take a long-term vision. Look what Charlie Munger said about China and the companies in China.
I think there's more value for the investor if you buy the best companies in China or the best companies in the United States. I think that at current prices, the best companies in China are selling cheaper than the best companies in the United States. So I think the Chinese don't have to go abroad to find good investments. They've got plenty right in their own country. There's some awfully strong companies in China that are selling at reasonable prices.
Do you hear that right now? This was 3 years ago. So what do you think is happening now? If that was 3 years ago, it got even worse. So that's why you see Charlie Munger head first in Alibaba, because he just understands that where the market is pricing Alibaba and all these Chinese stocks, it's crazy. It's unheard of. The gap is just way too wide. And then when you look even more news on Barron's, Alibaba stock gets more price target cuts. And this is what the analysts are doing. They follow what the other analysts are doing. So in the short term, the institutions are following the analyst projections and they're all getting cut, right? But in the long term, if you look at the revenue growth of Alibaba, it's still very consistent. 32%, 56%, 58, 50, 35, 40. And the next year, they're going to be like what? It's going to be around 25, 20, and that's going to continue. And remember, Alibaba is a huge company. Huge companies should not be able to grow revenue so quickly. And when they do, that just shows you their dominant position. So Alibaba investors have been having a tough time of late. The stock price is near the lowest point since late 2018. So that goes to show you late 2018. So you're saying in 2021, all that time, you're saying the business is still cheaper? Why is it still the same price and cheaper in 2018 when it's grown so much? 50%, 20, 30% year over year. And this is all due to poor quarterly earnings and more regulatory pressures. But you can see, even though this analyst is kind of bearish on the stock, he cut the price from 330 to 230 on Tuesday. But look at this, he still believes in Alibaba's competitive position and he still sees it as a solid company. The fall in revenue growth was largely due to a fall in domestic sales, but the other parts of the business, such as the local services, the international commerce, and are still solid. Also brush aside some of the concerns around profit margins, describing how it comes as the company continues to investments in new initiatives for the long-term sustainable growth. So that's it with Baba. You have to be in it for the long term because it has sustainable growth if you're looking that far. But as long as the regulatory overhang stays over the company, it's always going to, like, Baba's price is always going to be on the decline. And especially with the whole pandemic too, and the domestic sales, and people don't want to go out as much, and the regulatory crackdown, the weakening consumer spending, like all of that is affecting, but that also always goes in reverse. It's like a pendulum. It starts here and then it goes back there. And that's what we see with Alibaba. It still has a dominant market share in the economy. We think Alibaba will maintain its dominance in the public cloud market in China. Alibaba Cloud Computing Division grew by 1/3 year over year in the latest quarter, notching 3.1 billion in revenue, about 5% ahead of expectations. Additional market share gains should come from food delivery and offline retail, which represents a large, unpenetrated total addressable market. So people are not taking into account the cloud business, the offline retail business, food delivery. Like, there's so much semiconductors. There's so many other businesses Alibaba is in that people are not taking into account because all the regulatory overhang. So yes, in the short term, price matters. The analyst cuts matters because the institutions, those are the ones who are investing heavily in Alibaba. They're taking their money out because the analysts are cutting targets. But in the long term, that doesn't matter. All the price target cuts doesn't matter because we see the growth year over year, not quarter over quarter, year over year. It's still growing 35%, 40%. And that's going to continue from 20 to 23 to 24%, as gross margins will get better as their initiatives and investments start actually becoming more profitable. So guys, that's it for the video, man. Tell me what you think, like it, subscribe down below, and I get back to you in the next video. Peace.